Hi folks, welcome to Ditto Insurance. I am Shashank, your host, and joining me today is Sushant, our Senior Program Manager at Ditto. He has advised over 5,000 clients during his time with Ditto. Welcome Sushant. Thank you for joining us.
Thanks for having me.
Sushant, I have a very interesting question for you.
Okay.
Have you ever given a competitive exam like JEE or NEET?
I've given the GMAT.
You might have seen that they have MCQ questions, multiple choice questions.
Sure.
I can bet that you, I, and our viewers here have at least encountered one question in our life where the options look the same, but they are different entirely, obviously. Now, I was faced with one such similar case yesterday when I was trying to read a policy document.
Okay.
So, there were mentionings of Coinsurance, Copay, Deductible, and these were all fairly new to me, right? So I went on to Google and tried finding what they were. Superficially, I understood that basically you need to pay some money in order for your insurance to activate your insurance benefits.
Pretty much. Yep.
Now, I have this question. Why are there three different terms for one single concept?
Right. So while the concept might be same, I think how they work or the use cases might be slightly different.
Okay.
So if I were to start with co-payment, for example, this is something, or as the definition says, it's a situation where you co-pay the bill with the insurance company, right? If a hospital bill comes up of 5 lakhs and your policy has a 10% co-payment clause, you'll essentially be paying 10% of that bill. So 50,000 comes out of your pocket, 4.5 lakh comes out of the insurer's pocket. The hospital at the end of the day, of course, gets the entire bill.
Understood. But is this mandatory for everyone to give a certain amount to the insurer before you can use your claim?
No, not necessarily. I think in co-payment especially, there's two scenarios. So one is a voluntary co-payment where you yourself opt for a co-payment. Here, to be honest, I think a customer would choose this purely to bring down his premiums. Because the insurance company realizes that, look, when a hospital bill comes to us, we don't have to pay the whole bill. The customer is going to foot 10-20% of the bill.
Okay.
So thereby they're able to offer you that insurance policy at a much lower cost for that year. Your premiums come down essentially. The second type of co-payment is situation-based co-payment. This is one where, yes, the situation you're in, the location you're in, the medical history you have, any of these could warrant a mandatory co-payment in your policy.
Can you elaborate on a few situations where these co-payments might kick in?
Okay, so I think the first one is a location-based co-payment. Let's say, for example, if you are residing in a tier 2 city, more than tier 2, actually I think insurance companies use the terminology zone 1 and zone 2. Now here as well, it's not your regular tier 1, tier 2 cities, right? Like metro cities and non-metro. In insurance, what they do is they have identified a few cities where the medical costs, health infrastructure costs, treatment costs, everything is a bit higher as compared to the average cost. Some examples of this would be, let's say, Delhi and Mumbai. So what an insurance company does is if you buy a policy in a zone 2 city like Bangalore, but you decide to avail treatment in Delhi or Mumbai, which is a zone 1 city for them. Now here, like I mentioned, according to them, the treatment cost is higher, right? And they calculated your premium based on your zone 2 premium, which is Bangalore. So if you end up in a zone 1 city for treatment, they can warrant a co-payment there. Saying that, look, this customer paid us a lower premium because we assumed he would claim in Bangalore. So technically we thought the claim amount would be 2 lakhs. But because he took that same surgery in Delhi, the claim amount is now 2.5 lakhs, for example.
Correct.
So they can apply co-payment saying, look, we'd expect you to foot a slight amount of the bill.
Understood.
That's one situation. Another example I can give you here would be hospital-related co-payments. So every insurance company has a list of network hospitals they've partnered with. They have preferred hospitals or whatever they're called. Now, what a lot of people don't know is insurance companies actually work with these hospitals to get preferred rates from them. Saying that, look, if our customers come here to get a treatment from you, you will offer him this treatment at a package of 1.5 or 2 lakhs or 3 lakhs, whatever the amount is. Right? Because you know it's our customer and we have to foot the bill at the end of the day, they prefer that, hey, look, why don't you try to negotiate some sort of rate with us?
Okay.
Now, if I get my treatment done in one of the non-network or non-preferred hospitals, the insurance company says, look, he's not going to give that same package deal. If you'd gone to our hospital, you'd have got it 2 lakhs, but here, because you've come here, you're paying 2.2 or 2.3 lakhs. They haven't negotiated the same package with these hospitals. Now, insurance companies want to encourage you to use their network because it works out for them financially. Therefore, if you go to one of their non-preferred or non-partnered hospitals, some companies can put this clause in your policy.
Okay.
Saying that, look, for any claim in these hospitals, you get ready to pay 10-20% of the bill. That's another possibility. A third scenario I can think of is age-related co-payment. Meaning, if you are above the age of 65, for example, and you're buying insurance for the first time, your policy, there's a very high chance your policy will have a mandatory co-payment. Once again, just the risk of a higher claim, right? A 65 plus year old person, chances of them using the policy are quite high.
Correct.
For basic accidents, for treatments, for surgeries, anything. Right? So the insurance company once again feels, look, why do we pay the entire bill?
Right.
You do have policies for senior citizens without co-payment, but yes, for the most part, it is usually with co-payment.
Okay.
That's just the risk associated with it. I think that's how they see it.
Okay.
The last and the most common one is the pre-existing disease co-payment. If you try to buy health insurance with some sort of significant medical history or some significant medical conditions, the insurance company firstly can even deny giving you the policy, or they can give it to you at their terms and conditions, saying that, look, we'll never pay the full bill. We know you have a significant medical condition that could attract very high costs every year,
Exactly.
right, which they have to reimburse. So they would prefer that, look, we don't want to pay the whole bill. We'll pay 70% of it, 80% of it maximum. 20-30% of that cost comes on to you.
So what you're basically saying is, apart from paying a higher premium, you also end up paying a part of your bill.
Portion of your bill, yes.
Apart from even the loading charge.
Absolutely. Now here for that customer, it still works out because this person has a medical history and as of now, he's paying 100% of the bill himself for all his treatments. He's in that mindset now that, look, something is better than nothing. I'm right now paying 10 lakhs out of my pocket. I'd rather pay 2-3 lakhs and have the insurance company pay the remaining 7-8.
Exactly.
He looks at it from that point.
Works out
right?
for him at the end of the day.
He's obviously incurring quite a bit expense.
Okay.
Yep.
This clears what a co-payment does. Let's now head to deductibles.
Sure.
Now, amongst the three, I'll be very, very honest with you. It was very hard for me to find much information on deductible.
True.
Because it sounds very, very similar to co-payment.
Yep.
Now, help me deduce deductibles.
Fair enough. So look, I think deductibles are firstly applicable not in base health insurance plans. They're mostly applicable in top-ups or super top-ups, which are additional policies you buy in health insurance. So I think before explaining a deductible, maybe let me give you a quick brief on what a top-up or super top-up is.
You read my face, right?
Yep.
Yeah.
So look, let's say you have a base health insurance policy. Now this could be of 5, 10, 15 lakhs. Now you might realize that, look, my base health insurance could cover normal treatments, COVID, fever, dengue, a small accident, minor surgeries and so on. But what if I'm met with a major critical illness, right, or something that could attract a very significant expense where I'm spending 30-40 lakhs to get treated? For this reason, insurance companies came out with the plan saying that, look, the probability of you making these claims is very, very low. The scenarios in which you need to use this is very low. So why not launch a separate product for this?
Okay.
As a top-up plan is what they call it. So it's known as a top-up or a super top-up.
Okay.
This is a separate plan you purchase apart from your base health insurance with the logic that, look, my base health insurance will cover everything, my basics. But in case I'm faced with a very serious, dire situation where I have a big expense, then I can activate my super top-up.
Okay.
That's at least their logic, that how they kind of, a customer looks at it as well. It's more of his backup that he has that, look, it's not my primary, policy that I'm going to use every day. Now you have two types of policies there, a top-up or a super top-up. Both of them come with an option called a deductible. Now when insurance companies will wanted to make it lucrative or attractive for customers, right? That, look, this is something you should buy and keep with you. Hopefully you never need it. You'd be using it even more infrequently than you would use a health insurance, right?
Correct.
Because of the scenarios that we're talking about, the kind of claims, right? The kind of treatment cost you'd want to cover.
Yeah.
So all things considered, the first thing about top-ups and super top-ups that make them so attractive is their extremely low premiums.
Okay.
You can get from most companies, you can get a 20 lakh, 50 lakh, even a 90 lakh top-up at barely 2,000-3,000 rupees. Exactly. Here I'm talking about a young, healthy, fit person like a 25-year-old, no medical history and so on.
Okay.
That's the approximate costing. Now this is where you must be wondering, right? How does the insurance company make money on this?
Exactly.
Right? So the first thing, and this is where I think is the best point to introduce, that, hey, this is where a deductible comes in.
Okay.
So super top-up is designed in such a way that, look, if it's a 40 lakh top-up, it will come with a 10 lakh deductible amount. Meaning, once you're hospitalized, your bill crosses 10 lakhs. The first 10 lakhs of a bill that is charged to your expenses. That amount has to be cleared either out of your own pocket or from your base health insurance policy.
Okay.
So the top-up acts individually from your base health insurance policy. His assumption is, I will get that 10 lakh rupees. Right? Only then I'll have to pay the remaining 40 to this customer.
Exactly.
So it's basically an initial amount that you pay on your own, and then the insurance company says, okay, we'll foot the rest of it.
Okay.
So like you rightly said in the beginning, it is a type of co-payment. It is similar to an extent. Here, however, it's not a percentage. It's a fixed amount every year.
Okay.
You have to pay just that one amount once a year and you're good to go. This is how it is in super top-ups.
Right. This clears what deductible does and how it is a little different from co-payment.
Right.
What are some pros and cons in these deductibles?
So I think pro, like I mentioned already, right, is probably the mitigated costs here. The fact that I get such a large cover for such a low premium. And that also acts as a con. Let's say if I don't have a base health insurance policy and I'm left paying that deductible out of my own pocket. Look, one thing of a situation where I might have paid 1,000, 2,000 in premiums, but when I'm faced with my deductible of 5, 10 lakhs, that's a huge amount.
Right.
2, like I mentioned, you have to pay your deductible every year. So health insurance is a 1-year contract. Same goes for a top-up as well. Meaning, if I want to make a claim that year in my super top-up, I need to first pay the deductible, then I can use the balance amount.
Right.
Next year, if I'm faced with the claim again, once again, I have to shell out the deductible. And if you remember, we listed out the scenario that, look, a super top-up is helpful when you're faced with a very serious critical illness, which has a very high chance of having repeat costs every year. Prolonged treatments, as we call it.
Exactly.
So the probability of you actually being stuck in the scenario where now you're paying 5, 10 lakhs every single year, that could really put you in a tough situation.
Yeah, when you think about it, you're stuck in a limbo paying out every year.
Pretty much,
right?
Yeah. And here, like I said, this is just a rare scenario where somebody's bought just a top-up or a super top-up.
Okay.
He hasn't opted for a base health insurance policy.
Understood.
So I think that's where Ditto's recommendation is obviously one, have a combination of both, right? You have a base plan and a super top-up so that your base plan serves your basic treatments and super top-ups cover your serious critical illnesses. Another thing I'm seeing these days, right, with a lot of top-ups and super top-ups, is that they don't come with a lot of features like no claim bonus and restoration, which are quite popular features in base plans.
Makes sense. Exactly. Or else you would go restore every year.
You'd keep restoring such a large amount.
Yeah.
So obviously for the insurance company, it makes sense to design it that way.
Correct.
But my point here being thinking of it from a customer's point of view, right? He's missing out on some really essential features like this that could come in handy.
Exactly.
So for that reason, we're actually seeing a decreased popularity in top-ups.
Okay.
We're seeing people are now leaning towards buying a higher base sum insured itself.
Okay.
Instead of taking a traditional 10 lakh health insurance policy, people are realizing, hey, maybe a 20, 30 lakh health insurance makes sense.
Right.
One, because there isn't much of a cost difference. People think, okay, maybe taking a 10 lakh costs X amount, 20 lakhs insurance would cost 2X amount. But that's not the case. It costs hardly 1.2X. So that's something insurance companies have also done a bit smartly.
Right.
And 2, for me, look, if I have a 20, 30 lakh base policy with the features of bonus and restoration, I now have 50, 60 lakhs worth of benefits per year.
Correct.
So I'm actually covered pretty much for all possible scenarios.
Wow.
And I don't have the hassle of making 2 different claims.
Yep.
That's another scenario. Yep. Another con I can think of is if you don't have a base policy and a top-up from the same insurance company, when you're faced with a claim, the chances of you getting both on a cashless basis is almost nil. Because for a hospital to work parallelly with 2 insurance companies, that okay, insurance company X will pay his deductible, insurance company Y will claim the top-up, they won't allow that.
Okay.
All the documentation has to go to just one person. He'll take 2-3 hours to approve it on a cashless basis.
Okay.
So once that's done, the hospital will not do the same back and forth to the next one now.
Makes
You'll
sense.
now be looking at a scenario ki one of them is cashless, one of them you pay out of your pocket, you go back home and you start the reimbursement process.
That's a lot of work.
That's a lot of work for a customer.
And you don't get all of this information from just reading a policy document because, as you know, it takes at least 5 to 7 hours for a lame person to read a policy document. True. And even then, they might not be able to get into the nitty-gritties of it.
True. Sometimes you won't comprehend all the complicated terminology that they use.
Exactly.
Yeah, that's true.
And folks, this is why we Ditto here are here to help you. We're not just here to sell a policy, but we are here to help you understand how a policy works and which is the best policy for you. So if you're in the market, before analyzing the policy on your own, we suggest you to book a free of cost call with one of our advisors and we will help you get sorted. And on that note, we are hiring insurance advisors. So if you're someone who has a passion for helping people, and if you want a remote job and if you are looking for growth, then the link is in the description for you to apply. Sushant, back to our discussion. You've nailed the two concepts, deductibles and co-payments. Now help me understand co-insurance, because again, I didn't find a whole lot of references on co-insurance.
There's actually good reason for that. Co-insurance as a concept is not very popular or prevalent in India. In fact, I don't think there's any health insurance companies that are offering a feature like this.
Okay.
But if I were to simplify it, right, or put it into layman terms, and maybe before that, just a disclaimer, it's something that even I'm not too well versed with, but I think I can give it a shot. Look, it's essentially a combination of both, of co-payment and a deductible.
Okay.
So it's a pre-decided percentage of the claim amount that a customer needs to pay after the deductible has been cleared. Let me try and explain this with some numbers as an example. Let's say there's customer X. He has a 5 lakh health insurance policy. He's opted for a 10,000 rupee deductible. Meaning for that year, when the first claim comes up, he has to pay 10,000 rupees out of his own pocket. And he's also opted for a 10% co-insurance. This is the terms and conditions of his plan. Now, let's say he gets a bill of 1 lakh rupees. He's hospitalized and he's looking at a bill of 1 lakh. Firstly, he has to pay his 10,000 rupee deductible that he promised. Now we're looking at 90,000 rupees left in the bill. Then we're looking at a 10% co-insurance that he opted for. Out of that 90,000, he has to pay a further 10%. He pays another 9K out of his own pocket.
Okay.
81,000 is what the insurance company will finally pay from his 1 lakh bill. So it's basically a combination, like I said, of a deductible and a co-payment summarized as a co-insurance.
Okay.
Like I said, not a very prevalent sort of concept here. I haven't seen any companies offering it.
Okay.
If you were to personally ask my 2 cents on it, it doesn't make sense, right? You're looking at a customer paying a significant amount every single time.
Exactly.
Once again, the only use case where it probably makes sense is if you're really looking down to bring down your insurance cost.
Okay.
You're convinced that, look, I'm not going to make claims, so the yearly 10,000-20,000 I have to pay to this company, I want to reduce that.
Okay.
You're confident, look, you're not going to use this insurance plan, right? That's probably the only scenario you can think of where a customer voluntarily chooses something like this.
Understood.
Yep.
Now, as we reach the end of the video, I just want to ask you if you can summarize what we have learned about co-payment, deductible, and co-insurance. I mean, let's leave out co-insurance because it doesn't make sense. And what do we recommend at Ditto?
Okay, that's interesting. I think I'd start with deductible firstly. Look, like I mentioned, right, deductibles are something that are inbuilt into top-ups and super top-ups. I can't buy these products and not opt for a deductible. It has to be there. I can choose how much deductible I want to opt for. So there as well, try to keep your deductible as low as possible because you can choose something of even a much higher amount. And you might be in a situation where you're paying that out of your own pocket. I think, as I mentioned, the popularity of top-ups and super top-ups are reducing these days. People are seeing the whole hassle of making claims from 2 different plans.
Yeah.
They're also realizing the features missing from top-ups and super top-ups. Insurance companies themselves are also reducing the kind of new top-ups they're launching. While there's constantly new base plans coming out in the market, you don't see the same for top-ups out there.
True.
So for that reason, I think on its own, there is a shift coming in that people are not going for such policies anymore.
Okay.
They're directly opting for base policies. Coming to co-payment, look, while it's something that most people, right, any financial advisor, any insurance advisor would tell you, do not go for a co-payment, plain and simple. There are still 1 or 2 scenarios where it might help you to have a co-payment because without that, you might not be able to get a policy itself. Okay. And as I had mentioned, there are 2 scenarios I can think of. One is for senior citizens, people who don't have any options available. If you haven't bought insurance earlier in your life, but you now realize it's something you need and you're 65 plus. Once again, something is better than nothing, right? At least you have some company who's willing to foot 80% of the bill, if not 100%. Right? Would you rather pay 20% or pay 100%?
20. Anything.
Pretty much, right? And 2, if you already are diagnosed with significant medical conditions or history. Once again, you're already footing those bills yourself, right? You're probably not in a position to even function properly at your job and earn a steady source of income. You don't want that burden of, once again, paying 100% of your bills.
Yeah.
You would rather have, once again, 20% from your own pocket and 70-80% from a company.
Exactly.
So these are 2 scenarios where I think co-payment might actually come in handy because without this, no insurance company would give you a policy for these 2 scenarios, right? Senior citizens and people with, major critical illnesses or medical history. So I think, that would probably summarize it.
Okay. Thanks, Sushant. This was very insightful. Like always, a conversation about health insurance or term insurance is really enlightening with you. Thank you so much for joining us.
Thanks a lot.
And folks, drop your queries in the comments and Sushant here will answer them this time. Smash that subscribe button. And like always, happy insurance hunting.